Greetings. I'm Radan Benedict Alcaide from Group 1, composed of Grace Angelica Donato and Alexander Van Escoto. We are from Section 19 of Applied Math from Ateneo de Manila University Graduate School of Business. So today, we're going to present a primer on the MP2 Pag-IBIG Savings Fund. Hi, this is Badong, the sales king of Talong. He recently sold his shop, Vegetables Are Us. Now he's wondering where should he put his hard-earned money. He wants a low-risk investment to grow his assets conservatively. So presenting the MP2 Modified Pag-IBIG 2 Savings. So the Modified Pag-IBIG 2, also known as MP2 program, is a voluntary savings and investment program in the Philippines offered by the Home Development Mutual Fund, commonly known as the Pag-IBIG Fund. MP2 is an additional savings option for Pag-IBIG members looking to earn higher returns on their savings compared to the regular Pag-IBIG savings programs. So what are the advantages of investing in the MP2? First off, it's a simple investment vehicle. You only need to make your monthly contributions or a lump sum payments, and you get dividends at the end of the year. But despite being a low risk uh, investment vehicle, it boasts an impressive 7.03% as of March 2023 interest rate. So this translates to higher earnings for your money. Also, your savings in the MP2 program grow tax free. Unlike other forms of investment, this is not subject to capital gains tax or income tax. And since this is a government backed program, the government fully guarantees your MP2 savings. It has a low barrier of entry because you really only need a minimum of 500 pesos for joining. And there's really no limits on how much you can allocate. Enrollment is straightforward and hassle free. You just need to be a member of Pag-IBIG and you just have to fill out a bunch of forms. You can access your funds whenever you need them, and we'll talk about this later. There are uh, some idiosyncrasies on uh, withdrawing funds early. So we have a slide for that. So next, you have the option to open multiple Pag-IBIG MP2 savings accounts, and you can conveniently make payments through various channels like GCash, buy centers, etc. The disadvantages are you really can't withdraw your funds, or at least the matured part of your funds, without penalties. They must stay until maturity unless specified in terms. And although 7.03%, at least from this year's rate, is impressive, other investment vehicles have uh, gains higher than that. But of course, they are subject to more risk. So here, can I withdraw my money early? So as for the liquidity of the MP2 savings, you can end and withdraw your savings early. If you choose to compound dividends but later terminate for reasons other than the approved ones, you can get your savings back and 50% of your accrued dividends. If you opt for the annual dividend payout and terminate for reasons other than the approved ones, you'll only receive your savings. Okay, on to the last part. So here we'll show how the dividend payout is computed. So here we have a monthly contribution of 1,000 pesos. And for example, the current dividend rate is 7.5%. So here basically, you're saving like 20, up to 12,000 a year. And when you're computing for the 7.5%, it isn't actually computed on the whole 12,000. It's computed on your the average cumulative savings, or the average accumulated amount of your monthly savings. So let's say, for example, you're putting in 1,000 per month. Over a year, you'll receive 487 pesos and 50 cents. So let's say you withdrew that, and the next year you contributed 1,000 monthly again. So your cumulative savings, it would be 24,000, and you'll receive 1,387.50 dividend payout. The year after that, it's basically the same thing. So at the end of 5 years, you'll have your 60,000 pesos of savings intact. So that's 12,000 times 5, 60,000. And over the years, as you withdrew your dividends, the total of that would be 11,437.50. So overall, um, you've gotten 71,437.50 from the initial 60,000 pesos. And you basically increased the value of your 60,000 pesos by 19%. Okay. Next is, what if you didn't withdraw your dividends? What if you uh, let it compound? That's also a possible option as well. So what would happen here is basically you'd be contributing 1,000 pesos per month. That's 12,000 a year, and basically it's the same uh, compounding algorithm. It works on the average of your cumulative monthly savings. So for the first year, it should be similar. It's 487.50. But since you didn't withdraw that dividend, the 487.50, you saved it in your MP2. The new dividend computation will be based on that. So instead of 1,387 from last year, you'd be receiving a bigger dividend payout. It would now be 1,424. And it goes on and on until the end of the 5 years. So overall, the overall dividend payout would be 12,532 if you sum the the payouts from the past 5 years and you didn't withdraw it. So that's basically a 20.89% gain on your initial 60,000 pesos. So instead of receiving 71,437.50, you'll be receiving 72,000. Okay, so now we go on to the lump sum. So there's an option for paying it in bulk. And you'll see here that this actually accrues more interest compared to the previous scheme that we've discussed. So first off, let's say that instead of instead of contributing 1,000 monthly over the span of 5 years, let's say you did it all at once. You paid in lump sum. Say you added 60,000. So here, basically, you just be um, you'd be receiving the 7.5%, whatever is 7.5% um of your lump sum payment. You'd be receiving that year over year. So let's say that you received this year, you received the 4,500 pesos, and you withdrew that, and the next year, since your cumulative savings are still the same, basically the dividend payout is the same, so you'd be receiving 4, 5, 4, 5, 4, 5 over the span of 5 years. That's 22,500 pesos. So from 60,000 pesos, and then we receive the dividend payout, total dividend payout 22,500. After 5 years, that's 82,500. That's basically a 37.5% gain on our 60,000 pesos. And that's just because we're withdrawing the dividend payout. But what if we didn't? But what if we let it compound? So here in this table, you'll see, again, it's 7.5% over the cumulative savings. So in the span of 5 years, our savings and our dividend payout would compound. That would total to 26,137.76. So from 60,000 pesos, basically we'll receive 86,137 after 5 years, and that's basically a total gain of 43%, 43.56% over our initial 60,000 pesos. So, um, regarding which is most profitable, the most profitable, of course, will be the lump sum payment where you don't take out your dividends. This is the most recommended one. But you have to explore your really you have to explore your need for liquidity, because maybe 60,000 over 5 years would be too much. You may need the money for an emergency or something, so you have to account for that and invest intelligently. You have to factor in your monthly income, your emergency fund, etc. So thank you. If you want to ask, if you have any questions, you could just send us an email here, and I'll be sharing a link for the calculator in the link below, or in the comments below. Thank you.